Hello guys, welcome back to a new episode. RALLYTOP Investing 3.0 SMC Masterclass here. Now, let me ask you, are you feeling consistently frustrated in your trading? If that has been your experience, then you need to stick with me to the end of this video, because in this episode, we want to discuss about the candle mathematics. The candles that you see on your chart tells a story, and unless you know how to calculate the candles on your chart, you will continuously have losing moments in the market. This episode is very important for both the struggling traders and even advanced traders who do not know how to figure out what is happening on the charts. Now, the first thing you need to understand about candle formation is that a bullish candle, such as this one that you are seeing here, opens below. Once it opens below on any time frame, that is, but if you find it on the daily time frame, it carries more weight, but it's just the same formation. It opens below. Once it opens below, it now travels back down before expanding higher to create the high of the day. If it's a daily candle, it creates the high of the day and then retraces to close just right here. Okay? So in other words, what you find in the market is very simple. You find price open, for example, price will open around this zone, and sometimes you find it do something like this before coming down to print this low here. All right, after printing that low, price will now start going higher. It will start going higher until it gets to this high. Once it gets to that high, and then price retraces to close just here, and then it will start ranging somewhere there, waiting for the next day. Okay, this is the actual way that these candles are formed and are closed. So in a bullish candle, you are looking at the open, low, high, close. Now, in the case of a bearish candle such as this, the candle opens just above here and travels back higher, first of all, and then begins to expand downward to print the low of the day. After printing the low of the day, it retraces to close right here. So in other words, what you have is that as price opens just right here, just this way, price goes higher to print this high and then begins to retrace back down just like this. It comes back down to form this low here and then pushes back higher and consolidate just around here to close. Simple. So that is the candle anatomy. That is just the candle anatomy, okay, of both a bearish candle and a bullish candle. So I just wanted you to have a good background of candle formation before we go ahead to explain what I wanted to explain to you. Remember, when you have a bearish candle such as this, now this singular candle cannot give you much information. You need to wait for the next day's candle. In the case of a daily candle, even if it is in the case of any session candle, for example, the 1H, the 4H, any time frame, you wait for the next candle to form. Once it forms, it opens here and then goes back higher. Now, one thing you should be sure of is that when you have a bearish candle such as this, and now you have the next day's candle that closes below, just like so. It closes below the previous day's candle. This gives you an assurance that the next day price will travel lower. So the next day you are looking to take price lower. So you will need to go to your lower time frame to look for opportunities that you can take price lower. That's the first thing I want you to understand. And therefore, if you take your trade anywhere around here, your target will simply be this low here. That's what you will be targeting. Now, the following day, after price has closed below this previous day's candle, you are looking for opportunity to go short again this next day, this very day. You are looking for opportunity to go short. And therefore, what you will then do is to take trade around this zone. If you find any opportunity on the lower time frame to take trade around this zone, here will be your target. Simple and straightforward. It's not complicating. So now look at the way price has taken out this candle low. It did not close below just like this one. Just like this one, it didn't close below. Rather, it wicked below this previous day's candle low. Once you find this is telling you a story. This is the mathematics of candlestick. This is different from the scenario you found here. So in this case, it wicked. Once you find this, you know that the next day price will be going higher, and therefore you want to find an opportunity on your lower time frame right below here to take price higher. And where is going to be your target? Your target is going to simply be this candle's high. Okay? So as price closes above this candle's high and forms this bullish candle, remember this bullish candle closed above. All right? So what are you looking for? What are you expecting? You are expecting that the following day is that this next day's candle will be a bullish day. That's what you are looking for. So you can get to your lower time frame and look for trade opportunity to take price higher. For example, if you go to your lower time frame and you find anywhere around this zone that you can enter long, where is going to be your target? Simply, your target is going to be this candle's high. Why? Because you are expecting that the following day will be a bullish day. And as you can see, price hit your target here. But look at what happened with this candle that hit your target. Now, the wick of this candle took out the previous candle's high with a candle wick and ended up closing below the low of this previous day's high. This is telling you a story in the market. This is saying something to you that price is likely to start moving down. Okay? This is known as liquidity sweep. So this is a reversal pattern that you need to understand in the market. So once you find this, what are you to do? You look for any lower time frame entry confirmation around this zone to take price lower. Now, apart from that, look at what has happened here again. This candle wick took out this candle's low. Forget about this. This is an inside bar. Okay? This is an inside bar. You can skip trading on this day and focus on the day that we take out either the high or low of this candle. But in this case, this third day's candle took out the low of this candle with a candle wick. Remember what I told you here? Remember also what I told you here? The same scenario is playing out here. So this candle's wick was taken out. This candle took out this previous candle low, daily candle low. It took it out with a candle wick. Once you find this, that tells you that price is most likely to start going higher. So you want to go to your lower time frame and look for opportunities here. All right? Now, the second thing you need to also understand is that the high probability fair value gap is the fair value gap that happens after a swing high or a swing low. What I mean is that this pivot, this high, that you're seeing is also known as a pivot. So if price is coming back down, look for the most current fair value gap there. Price is likely to respect that fair value gap right here. You can find it here. This one here. Okay? That one. Let me change this to... So right there, as you can see, that's the fair value gap. Now, if you don't understand what I mean by a fair value gap, I'm talking about a 3 candle formation. For example, this is candle number 1, candle number 2, candle number 3. The high of candle number 1 is not touching the low of candle number 3, leaving this gap here. That's what we mean by fair value gap. Now, price respected that fair value gap. That is the only fair value gap that is valid when you open your chart. Let me say it again. Any fair value gap that happened, the most current fair value gap that happened after a pivot or a swing, high or low. For example, this is a swing. Why is it a swing, high or low? It is because this candle's high was taken out by this, and this printed the highest high. The high of the next candle is lower than this high. So this is a pivot or a swing, if you like. That fair value gap becomes a high probability fair value gap. All right? Now, price now went up after taking out this previous candle's low. With a candle wick, you are expecting a bullish day, and that happened here. So you can take price from here to go long. And where is going to be your target? Your target is simply going to be here. Very simple stuff, guys. Very, very simple stuff. That's going to be your target. And as you can see, your target was achieved if you took the trade down below here. And now, the next day, you will know that this next day's candle will be a bullish candle because bullish candle closed above this high. So the next day's candle will be a bullish candle. And therefore, you want to take trade going long. Okay? So what you should do is that you need to go to your lower time frame and look for opportunity to enter trade from here going long. And where is going to be your target? Of course, your target is going to be this high. Simple. That's going to be your target. And as you can see, it achieved that. This is the way that you have to start viewing your chart. You have to start viewing your chart this way. This is very, very crucial. Okay? Now, after that, price close above is a bullish day. You want to go bullish. All right? With this next day. The next day, you want to go bullish. So how do you do that? Well, you have to look for opportunity to go long. From where? From anywhere here on your lower time frame to go long. And where is going to be your target? Your target is also going to be here. It's as simple as that, guys. Your target is going to be there. And as you can see, it achieved that target. But look now, the following day, look at this candle. The following day. Are you still going to enter long? No. Why? Look at the way this candle, this following day candle, took out this high, this previous daily high. It took it out with a candle wick. That shows to you that price wants to go lower. And therefore, you want to take your trade from here going lower. And where is going to be your target? Of course, your target is going to be right here, this previous candle's low. That's going to be your target. And as you can see, that target was achieved there. Now again, you have something very peculiar here. This is a pivot. This is swing. And as price is coming back down, look at, you have this fair value gap here. Very simple stuff, guys. Look at this fair value gap. Let me redraw that one. Look at the fair value gap you have here. Just look at that. Okay? Price came into that fair value gap. Now, let me say this one more time. This very fair value gap is much higher in probability than this one. Why? Once you have a fair value gap here, first of all, and the next one also produces a fair value gap after a pivot or a swing has been formed, this fair value gap becomes high probability fair value gap. I want you to understand that. I'm going to show you all of this on the chart. And from there, you'll find out that this low was taken out with a candle wick. Once that happens, what does that tell you? Simple candlestick mathematics. It shows to you that price is going to go higher from here. So if you take your trade on the lower time frame here, where is going to be your target? You are taking your trade to go long. So your target will simply be this zone, this high. Okay? And so on and so forth. This is the way you should begin to view your charts. View the market from a different perspective from what you used to look at the market. Okay? If you actually want to make a headway, you want to remain consistently profitable in the market and move away from the camp of frustrated traders in the market, then you need to stick to what I'm showing to you now. Now, if you are enjoying what I'm showing to you, please consider giving us a like, and then please subscribe to our channel and turn on the notification so that anytime we publish a new video like this, you'll be notified about it. Okay? If you don't turn on the notification, you will not know when we post or upload a new video. And that's why we're asking you to just turn the notification on. All right? And please give us a like. So that is the mathematics of the candlestick. And you need to understand it perfectly. Now, I want to take you to the live chart and show you examples of what I have just shown to you now. And I'm going to also show you how to take trades on your lower time frame. Okay, using the mathematics of the candlesticks that I've just told you about now. All right, guys, so let's get there. All right, guys, let's look at a few examples, and let's start around this area. Now, look at this. The first time price took out this bullish candle right here. With this scenario, it tells us that this next day's candle is going to be bullish. Okay? So we are going to have a bullish day. Now, how do you approach the market this way? The first thing you need to do is that, because you have already understood that the next day is going to be bullish, because price bullish candle had already closed above the high of this previous day's candle. So with that in mind, take your fib tool and then mark from the low of this candle, being a bullish candle, not the low actually, mark from the open of that candle, take it all the way to the close of this candle. Simple. So just like so. And then you want to go to the lower time frame to take your trades. If you find any opportunity within the first half of this 50% fib level, all right, within the first half, that's where you're going to look for opportunity to go long if it presents itself on your lower time frame. Okay, so we can now take out the fib tool. I just wanted to use that to explain to us. So meaning that if you find your trade somewhere around here on the lower time frame, so what you are going to be doing is to take a bullish setup all the way to this target here. This will be your target. Now with this move here, well, this is the daily time frame, and you might think that this is a very small move. If you get to the lower time frame like the 15M, this is going to be a huge move to this point. All right, so that's how to approach the market there. Now the following day, look at what price did here. Price took out this high with a candle wick. This is what I have told you about. This is telling us a story in the market. It's telling us that price is likely to start moving down, and therefore on your lower time frame you want to take advantage of this candle sweep here. Somewhere here, if you find any opportunity to go short, then you go short. All right. Now, if you are observing, we are not trading according to the structures of the market. We are trading purely based on candle by candle. I hope you understand that very well. So now we want to take price from here. If you find any opportunity from the on the lower time frame to take price lower. Now, where is going to be your target? Well, your target is certainly going to be here. That could be a long time target, but that is going to be your target. And so we continue. Now, but don't forget that you cannot hold your trade all the way. Look, this candle that you're seeing here is massive. On the lower time frame, you can begin to take partials because the market can do anything. The market can simply turn back and continue higher at any time. So on your lower time frame, you want to take partials as price is moving downward. Okay? Now, so the following day, we want to wait for price to close below the low of this candle. Without that, we are not taking any trade. So let's see that. So as you can see, price clearly closed below the low of this previous candle, and that's what we are looking for. Now that price has closed below, we are now sure, even though we found a reversal pattern here, but now we are very sure that the following day is going to be a bearish day. Now, if you want to trade this day based on this reversal pattern here, you do exactly the same thing. But I don't advise you to trade this day. I want you to wait and trade the following day. Now that it is confirmed that price on the following day is going to print a bearish candle, so you wait for that to happen. And if you are waiting for that to happen, what do? You take your fib tool. This is a bearish candle all the way from the open here to the close, and you take 50%. The first half will be low here, will be around here. Okay, so you take the 50% of that candle. So let's continue to advance price. So as you can see, this is the 50%. On your lower time frame, you could find an opportunity to go short. And if you go short from here, where is going to be your target? Your target is going to be here. Please follow me step by step. This is very important. This is going to be your target. Now, you may think that this is a very small move. No, this daily time frame. If you get to the lower time frame, you realize that this is a huge move in the market. Meanwhile, remember, our target when we took trade from here was here, and now price has achieved that target. The following day, we are still going to continue on bearish day because price has clearly closed below the low of this candle. So now what do? Pick your fib tool again, and from the open of this candle to the low of this candle, you wait for price to open and go into the first half of this 50% fib tool. So let's continue to advance price and see what happens there. We want to go short. Now, as you can see, if you took a short position here on your lower time frame, if it gives you the confirmation to go short, where will be your target? Just right there. Okay, that's going to be your target. Though our target has been achieved, but look at what happened. Price printed this wick here and took out the previous day's candle's low with a candle wick. This is telling us a story that price is likely to start moving higher. So if price is moving higher, remember, we are still going with this bearish flow. Now price has closed below our target. We are still following this bearish flow until it tells us otherwise. Now this is just going to be a retracement before resuming the bearish scenario. Okay, so we want to go long from here because it has taken out this candle with a candle wick. Now, where is going to be your target if you go long? Well, your target is going to be the 50% of this candle's range. Okay, This time it is going to include the wicks. I want you to remember that it's going to include the wicks, and so that's going to be your 50% somewhere here. All right, that's going to be your target, and therefore let's continue to advance price and see what happens. So as you can see, price started moving higher. Now we know that we are bullish, even though it didn't close above, but we are bullish because this candle wick that was taken out here is a clear signal that we want to go higher, at least to this candle's 50%, the midpoint of this candle. All right, so we continue. So we are looking for a bullish day the following day. If you are looking for a bullish day the following day, let me take out some of these fib tools so it doesn't confuse us. So if you are looking to take a bullish candle the following day, that means that you have to mark out the 50% of this candle, of the body of this candle, and you want to take price from the first 50% on your lower time frame, that is. Okay, so let's continue. And if you take any trade from here, where is going to be your target? This is your target. Simple. Let's continue. So as you can see, target achieved easily. All right, now after target has been achieved, look at the way price took out this previous candle. Let's look at this previous candle, this candle. Look at the way it took it out with a candle wick. Once more with a candle wick. Okay, you remember the same scenario that happened here, the same scenario that happened here has just occurred here. So this is telling us a clear statement that price is likely to resume this bearish structure. It wants to go down, and if it's going down, where is going to be your target? Well, your target is going to be right here. So let's continue to advance price and see what happens. And as you can see, first half price came down to take out this low here. So when it took out this low here, this is showing to you that the following day is going to be a bearish day. So we are looking for to take trade going lower until we are proven otherwise. And now let's look at it. How are we going to approach this trade? How we are going to approach it is to use your fib tool and mark from the open of this candle to the close of this candle. So that's your fib. So you want to wait for price to come into this first half of this 50% fib tool. So when you go down to your lower time frame and you find any confirmation to go short, you go short from there. And if you go short from there, where is going to be your stop loss? I mean your TP. Your TP is simply going to be here. As simple as that, guys. So let's continue to advance price. So now price did not reach our target. Instead, it printed this inside bar. This candle did not reach the target or took out this low. Neither did it take out this high. This is an inside bar. If you like, you can skip trading this day with this kind of thing. We are still focusing on this candle here. So let's continue to advance price and see what happens next. Okay, so now something has happened here. Something has happened here. So here, our target was not achieved. Perhaps you could have been taken out at break even, or you make a little profit there. Now, but something has happened here. This candle's high is taken out. With a candle wick, again, is telling us a story that price wants to go lower. And if price is going lower, where is going to be your target? Your target is going to be this one still, because it has just taken out this high with a candle wick and closed below that previous candle's high. Look for opportunity on the lower time frame at this high. Okay, look for opportunity to go short, but this is going to be your target. So let's continue to advance price. So price did not come our way. If we had taken this trade, we would have gone -1. Is that clear? And this is allowed in the market. So now price has clearly closed above this high now. So the following day is going to be a bullish day. So we are looking to go bullish the following day. Now how do we do that? Well, how you do that is to pick your fib tool and observe the 50% of the open and close of this candle. So you want to see price come into this first half of this fib tool, and then you go to your lower time frame to take price higher. And if you take price higher, where is going to be your target? Your target is simply going to be here. It's as simple as that. It's going to be here. So let's continue to advance price. So as you can see, the first half, price came into the first half of this 50% fib tool and now achieve our target easily. Now again, the following day, you now can tell with some assurance that it's going to be a bullish day, and therefore you want to do exactly the same thing that we did here. Because this is going to be a bullish day, you just take the opening and the close of this candle and wait for price to come and tap into the first half, this first half upper part here, the first half of the 50% fib tool on your lower time frame. If it gives you any opportunity to go long, you go long from there. And where are you going to target? You are going to target this high here. Simple. Target this high. So let's continue to advance price. So as you can see, that was achieved easily. Look at this. From here, you would have gone to your lower time frame to look for opportunity to go long. And so our target has been achieved. Now, look at what price has done here. Let me take out all these fib tools so that it doesn't confuse us. Look at what price has done here now. Okay? So price took out this previous day's high with a candle wick. What does that tell us? It tells us that price is likely to start going down. And therefore, on your lower time frame, you want to look for an opportunity to go short from here. So as you can see, price still did not hit this our target, but came close here. Maybe would have been taken out at break even or something like that. I don't know. Okay, so it depends on how you manage your trade. Now price came to this point and moved back higher, but before it moved back higher, let's take out this fib tool. Remember, these candles are indecision candles, so you need to be very careful the way you approach the market with these indecision candles. All that we can say is that price swept this low here, swept this low here. If you find any opportunity on the lower time frame, you can take price higher to where? To this high. This is going to be your target. This is going to be your target. And if you took any trade there going higher, then your target is achieved. Again, price took out this previous day's high with a candle wick. Again, it's telling you that price is likely to start coming back down. So remember, this is indecision candle, so you need to be very careful. So if you find any opportunity here on your lower time frame to go short, you can go short. But remember, this is indecision. This candle is called indecision candle. Both the buyers and the sellers are at equilibrium here. So no one knows who will carry the day, whether the buyers or the sellers. You need to put that at the back of your mind when you are trading indecision candle like this. Alright, so let's see what happens next. So as you can see, like I said, it took out this high and price went down. I forgot to tell you where is going to be your target. Your target is going to be right here, this low. The low of the previous candle is going to be your target, and that target was achieved easily. But look at the way price, alright, is reacting here. It closed below these candles, this previous candle's low. Once you find that it closed below, that tells you that price is likely to continue with this bearish movement. So want to look for opportunity to go short from here. Now remember what I told you. If you are going short, then you need to mark out the 50% of this candle and wait for price to come and tap into this first half of the 50% of your lower time frame, and then you take price lower. And where is going to be your target? This is a huge target. Remember, this is a daily time frame. This is a huge target. It may not get there. So what do? When you find this kind of scenario, take 50% of this candle wick, and that means that your 50% may be somewhere around here. Okay, so that's going to be your target. And so let's wait for price to tap into this first half of this 50% and we go short. So let's see. So as you can see clearly, price tap into this first half of the 50% of your FIB2 and then drop to hit our target here. So that's how to take this trade. So now we can be sure with a certain degree of certainty that price is going to continue with this bearish movement when it opens the following day. Okay, now, so what do we want to do? You use your FIB tool again, because we are expecting a bearish day. Use your FIB tool again from this candles open to this candles close. Okay, now you want to look at the first half of the 50% FIB tool on your lower time frame. If you find any opportunity, you go short. And where is going to be your target? Your target is going to be here. Despite the fact that this candle is an inside bar, you can decide to stay traded if you so desire, because it has given us a pattern here that price wants to continue to go down. All right, so we want to take price down until we are proving otherwise. So now this is going to be your target. If price, let's continue and see what price we do. So as you can see, it went above the 50% FIB2. In some cases you find it like that, but if you still find opportunity on the higher time frame to take your trade, you take your trade. I mean, on the lower time frame to take your trade, you take it to this low here, and as you can see, it achieved our target clearly. Now again, look at the way it took out these candles, the previous candles low, with a candle wick. That's telling us something. It's telling us that price may likely push up from here. It may be a momentary reverse, a momentary retracement. It could be a retracement. It could also be a total reversal. We don't know. So, but we want to trade candle by candle, and therefore with this now we want to go to our lower time frame and look for opportunity to enter the market here. If we find any opportunity on the lower time frame to enter the market here, you want to take the market here to go long. And where is going to be our target? Our target is going to be right here. That's going to be our target. Okay, so let's continue to advance price. So can you see that price clearly went up and our target was achieved? Now this bullish candle had closed above this high, so the following day we know that we are going to go bullish. Simple. So what do? How do you approach the market? What you do is that pick your FIB2 from the open of this candle to the close of this candle, and wait for the first half of the 50% for price to come into it. Then we go higher. And where is going to be our target? Well, our target is simply going to be this high. All right, so let's continue. Can you see that? So the first half on your lower time frame, you could have taken trade and then hit our target here. And now with this candle closing above this one, we now know that the following day is going to be a bullish day. All right, so what do? Now remember, this is an indecision candle. Is it actually an indecision candle? Yes. You can take the whole 50% of the entire range and wait for price to come and tap into the first half of the 50%, and you take your trade higher to where? To this high here, guys. This high. That's what you want to do. So let's continue. So as you can see, that happened here. Okay, it happened here. It closed above. So when it closed above, we now know that the following day is going to be a bullish day. So how do we approach it? Well, pick your FIB tool, I meant to say, from the open to the close. So we are waiting for price to come and tap into this first half of the 50% and take us higher. So our high here will be our target. Simple. Let's continue. So as you can see, that happened and our target was achieved. But look at the way price took out this high. Very, very important, very instructive. Look at the way it took out this high with a candle wick. That tells us that price is likely to start going down from there. So if it's going down, it could be a momentary retracement to where half of this candle. So maybe around this zone will be the half. So if on the lower time frame we find any opportunity to go short, we target this middle of this candle here. And so let's continue to advance price and see what happens. So as you can see, price first must have taken us out from here if we found any opportunity here. But again, if you remember the video on two-step candle sweep, look at this. It swept this high again to come lower, all right, before coming lower to get to our target here. Okay, so if you found, this is high probability scenario. The first sweep was here, and this is the second sweep. This is a powerful candle pattern that tells you price wants to go down. So now how do you approach it? Now we know that the next day price is going to go down as well until we are proven otherwise. So what do? Now pick your fib tool from the open to the close of this candle. Okay, so the first half, this first half here on your lower time frame, take price lower to where is going to be your target. Your target is going to be here, guys. Your target is going to be right there. So let's continue. So as you can see, it met our target here, even though it didn't respect the 50%. But if you found any opportunity on the lower time frame to go short, you go short to this low. Okay, and now look at this. Now it has taken out this low with a candle sweep, and that shows to us that price wants to go higher. So what do? We want to take price higher. If we take price higher, where is going to be our target? Our target is going to be this high here, guys, because that means that price has finished this retracement, wants to continue with this bullish trend. All right, so we continue to play price and see what happens next. If you find any opportunity on the lower time frame, you take your price higher. So let's continue. As you can see, look at it. So price has now closed above this high. This will continue like this. This is the way for you to look at the market objectively. If you are a newbie, instead of struggling with structures and liquidity, all you need to do is to follow candle by candle. I hope this video helps you. Please watch it over and over again. If you are new to our channel, please don't forget to subscribe and turn on the notification so that anytime we publish a new video like this, you'll be notified about it. And if you want to join our VIP community to learn more on how to trade the market professionally, the doors are open for you. And if you haven't joined our free Telegram channel, please do so just immediately, because right there we want to start going live. Okay, if you belong to our Telegram channel, you'll be able to know when we are going to go live. So we are going to draw the curtain on today's lesson right here and now. I thank you for listening to me. I see you in our next educational video.